So raise your hand if you have debt. Me. Not debt free. I still got debt. Raise your hand if you wish that debt will go away quicker. Also me. I want it the door. I want it to leave. Okay. In today's budget nugget, I'm going to be sharing with you guys how to shave time off of the life of your loan. This trick will work with any loan that you have that you are paying interest on. Hey guys, welcome back to my channel. It's Ryan from Mama's Got a Budget, and thank you so much for joining me. So on today's video, hi, how are you? Hope you are doing well, first of all. Today's video is something a little different. I wanted to start kind of a new series here on the channel. So let me tell you where I was going with this and then give me your feedback, okay? So driving to work, brainstorming as I usually do, I was thinking like, what kind of short form content can I offer the fam on YouTube? Because you guys know I make budgeting movies, I go on in videos. I'm just trying to pack as much knowledge as I can into a YouTube video, right? And that can in turn make the video very long. So I was like, what kind of bite-sized content can I offer the fam on YouTube? So I was thinking, and I came up with this thing, and I'm sure you can see by the title, it's called Budget Nuggets. So I wanted to drop little gems still without the long form of the video. So you guys let me know how you guys like this, and if you do, I will make it a weekly thing. There's not going to be any sort of chronological order, rhyme or reason type of thing. It's going to be finance topics, budgeting topics that I wish that I was taught when I was younger, slash how I can put it in layman's terms for whatever you may need to know. So for today's video, we're going to be talking about loans and the life of a loan and how you can shorten the life of any loan that you have that you're paying interest on. So I hope that kind of makes sense. Hope that you are here for it. Let me know how you're feeling. Also, my craft room, my basement is a mess behind me. Don't pay attention to that, pay attention to me, okay? A couple church announcements before we get started. The merch sale is still going strong. It ends this Sunday, April 11th at 10 p.m. Central. So if you haven't, go ahead and get you a t-shirt, tote, cash tray, or planner. I've already started ordering the supplies that I need based on the numbers that I'm getting. You guys are showing mad love and I appreciate you so much. The second thing is, along with this video, there will be a digital download available in the shop to kind of help you put a vision to what I'm talking about, and we'll go over it in this video as well. So if you're interested in that, if you are here for the idea of budget nuggets, hashtag budget nuggets, then go ahead and keep on watching. Okay, so raise your hand if you have debt. Me. Scroll right here. Not debt free yet, but I'm aiming toward it, okay? Me. Still got debt. Raise your hand if you wish that debt would go away quicker. Me too. Same. Still me. Okay, so with today's budget nugget, I'm going to share with you the #1 tip on how to make debt go away quicker. The most painless way to make your debt go away quicker. This trick will work on any type of loan that you may have outstanding, be it credit card, medical, educational, payday, anything. Anything that you can accrue debt for. Store cards, you know, things like that. Mortgages, that's a big thing. Okay? This will work on all of those types of loans, anything where they're charging you interest. And chances are, unless you got in and like, you know, no interest for the first 12 months or some type of thing, chances are you're paying interest on your loan. It may be small, but interest is just the cost of you to borrow the money. That's how the lender makes money. They say in business, they charge you money to borrow the money, okay? So if you want to make those debts go away any quicker, the most painless way possible, and I'm also confused on why more people aren't talking about this and why I wasn't taught this growing up. Like, I didn't learn this until well after college. I mean, well after graduation. So no fault of your own. You're here, you got me now. I'm sharing the gems with you, okay? So the #1 trick is to pay those loans bi-weekly, not twice a month. Not monthly like the due date may say, but bi-weekly, meaning every 2 weeks consistently. You pay those bills, you pay that loan down. Okay? And you pay half of the loan every 2 weeks. I should also specify that. Pay half of the loan every 2 weeks. Now, Why is this any more significant, you may ask? Okay, let's break it down with a quick little visual we have here. Let's do some math, okay? So most loans, most bills are due once a month, right? Which means that you make 12 payments per year. Plot out 12 payments, okay? If you make a payment twice a month when you get paid, that'll equal out to 24 payments a year, but you're still paying half, which still divides up into the 12, making it still 12 payments a year. No change there, right? But if you're paying it bi-weekly, you in turn end up paying it 26 times a year instead of 24. Then if you divide that 26 by 2, you're actually making 13 payments a year, not 12, 13, putting an extra month's worth of payments on your loan in a calendar year, thus reducing the life of your loan. Loans have this thing called a maturity date, and that's when your loan is considered paid in full, all your debts are good, you're squared away, you can walk away from the agreement, right? So let's take myself, for example. I'm going to use some round numbers, but you guys know if you want to, hear my real numbers, of course, watch any of my videos, okay? So let's say I have a $1,500 mortgage that I have to pay every month, right? And my current loan balance is $200,000. So I log on, okay, I'm making a payment, log on, it's my monthly payment, I'm logging on, I see, okay, amount due on loan, $200,000. Okay, that seems like a lifetime away, but whatever. I put in my payment information, I send $1,500 off to the bank to pay it on my mortgage, right? I wait a couple days, I get a payment posted notification. I go back on to check my balance. I'm like, all right, sweet, it wasn't a lot, but it's something. Now my balance should be, $198,500 because I just paid $1,500. It left my account, I'm sure of it. And I look, and my balance that is now due is $199,750. And you're thinking like, what? But I just paid $1,500. Why did my balance only go down by $250? Odd, right? So once that is in your head, it can seem like you're on a hamster wheel. Like this is never gonna end. And every time you make a payment, it seems like it's only putting like a little salt bay onto the onto the actual principal part of the loan. But it's because of that damn interest, right? So in order to make this more comprehensible, I don't know, because I could not be making sense, right? I thought ahead, and I actually made a loan trying to scoot over. I actually made a loan amortization spreadsheet to show you guys. So I'm gonna hop over here and I'm gonna show you guys what I'm talking about. This spreadsheet is my first ever spreadsheet that is available for purchase. I get bugged about this all the time, like, can you make your spreadsheet, can you just format it, can you put it up, I'll buy it from you, I don't even care, you can just give it to me like it is, I'll fix it up, I just this is exactly what I've been looking for. So I'm gonna get into the habit of creating more spreadsheets. You guys seem to really respond well to them. So this spreadsheet, this exact spreadsheet that I'm about to show you guys, is up on my Etsy and my Shopify. I'll link it down below. Just a heads up, Shopify is cheaper than Etsy. Do with that information what you may. But this spreadsheet is formatted just so you only have to put in very minimal information up at the top, and I have formatted it to do the rest for you. So let's hop on over to the spreadsheet. I'll show you what I'm talking about and how we're gonna shave off time on the end of this loan. Okay, so I pulled up the Excel version of the loan amortization schedule spreadsheet that I have available for you guys on Etsy and Shopify, and I have this available in an Excel version and a Google Sheets version. So I think I covered all my bases there. So whichever one you need, it's available for instant download. So we have some cells up here in green, and then we have column H here that's green. These are the only cells where you'll need to put any information at. And I put a little note here off to the right in case you forget. Only the green cells you need to put info in. But then again, if you try to enter any information in any other cell, it's going to give you an error message. I locked everything else just to maintain the integrity of the spreadsheet, make sure that everything is agreeing as you go through. So this is all that you need to put in. So I'm going to plug in some numbers just so I can show you how this trick that I was talking about works. So my annual interest rate, let's see, I'm doing this on my mortgage, okay? My interest rate is locked in at a fixed 3.125%, right? Great, excellent rate. I agree with that. That's for 30 years. And for round number sake, I'm going to say that I borrowed 200,000. I think it was like 188,000 and some change, but just make it 200,000 for now. And then you can see instantly, bam, those error messages, now they turn red with these numbers, which is totally fine. We want them to be red. We want them to be negative. Okay. The only thing that we need to look at here, as you see this date, it says 1900. No, we don't want that. That was 121 years ago. We're living in the past. No. So by putting in our first payment date right here in the cell C7, we're going to put it in the month, date, and a 4-year format. So my first mortgage payment was due on December 1st of 2020. I pop that in, and bam. You see how this date changes? Now it's running a total. So based on this payment number, it's going to spit out what date it is. The balance is based on the ending balance of the previous amount, and then your payment is broken down in principal and interest. So if you have a 30-year mortgage and borrow 200,000 at a fixed 3.125%, based on this start date of December 1st, you should be making a payment of $856. Of that payment, $337 is going to principal and $519 is going to interest. That's what I was talking about. It's insane. These interest payments really add up. So I'm going to show you the way that I was saying, the most painless way to shave off time, thus lessening the amount of interest you're paying on these loans because they can get crazy. Okay, so let's say in this green column here we have in December, we didn't pay any additional principal the first few months, right? We just paid that minimum payment of $856. As you notice, we had a beginning balance of $200. We made a payment of $856, but our ending balance is still $199,664. That's because only this principal payment is going towards paying off this ending balance, which is insane. If we jump back up here, the original maturity date, this is what we're looking at. This is what I'm talking about off of those, where those small payments, they can really add up to change this date. This is showing me that my house won't be paid off at this rate until November 1st of 2050. Sounds about right. And if you scroll down here, you'll see that I made sure that that agreed with when your loan matures, is when it gets to zero, when your ending balance is zero, and that is, in fact, 30 years from November 1st of 2020, which is 2050, okay? So let's say the first couple months go by, we don't pay any additional principal, only the regular, the minimum payment due. But then let's say we get that stimulus, honey, we're going to pay an extra $2,000. What you're going to enter here is a negative $2,000, just like that, and hit enter. If you have any change, you can, of course, enter it the same way, just how you do it. So $2,000.50, let's just say. Bam. Right there, you'll see that that 856 went toward the ending balance, reducing the ending balance, but also this additional principal. There's no interest that's being dumped from this payment. All $2,000.50 of this is pure additional principal that's going toward paying down this ending balance. Then let's say you got real froggy and you paid off $5,000, right? Here. Now, bam, you're down to $190 that's due. Now, if we jump back up here, the calculated maturity date has now changed from November to March of 2050, which is still a ways away, but these small payments that you're making on top of the principal payment here, they really add up, and as you can see, that maturity date is getting lower and lower. The life of the loan is shortening, and if we scroll down, we can see that that is true by the final, here, the first time that it goes negative is in February of 2050, which is what we had above. Now, you won't overpay, right? You're only going to pay what's due, but this is just showing you how it's going to shave off time of that loan. Of course, you won't keep on going, making payments, knowing that you don't have anything due, so that's where it will stop for you. But this spreadsheet is formatted to go for 30 years, regardless of what you're doing. So there may be some times where you're not able to pay an additional payment. That's totally fine. But like I was saying, twice a year, you're going to be able to pay more on top of your loan, and that's going to reduce your calculated maturity date. So I hope that makes sense, but is that crazy or what? Mind blown. Am I right? Am I right? So let me know down below if you guys already knew that, or is this like some new information? I'm curious to find out. But I hope you guys enjoyed today's budget nugget video. If you did, let me know. Give me a thumbs up. Leave me comments down below. I want to know what you guys think of this video format, if I should come back for more. I already have an idea for next week, so I hope that you like it. I haven't filmed it yet, but I hope that you like it so I can continue with these ideas. I do want to come back weekly with these. I won't say like a specific day that I'll have the video up, but I do have ideas that I want to crank out weekly, just dropping little budget gems along the way. So if you guys are here for it, let me know, and I will talk to you guys later. Bye. Oh my god, I don't have any earrings.